Now listen closely. This video is not about how to commit tax fraud. This is about understanding the exact legal loopholes and wealth strategies that the rich use every single day to keep their money. Because here's the hard truth. The rich don't play the same game as the rest of us. They hire the referee. While the average person gets taxed on every cent they earn, the wealthy are playing 4D chess with the tax code. And the worst part? It's 100% legal. So if you've ever wondered how the rich build empires without the tax man breathing down their necks, you're about to find out. Grab your notes. This is going to open your eyes. Welcome to Fast Lane, your fast track to financial freedom and lasting success. Let's get into it. 1. They don't earn money. They structure it. The biggest scam ever sold to the working class? Get a job, work hard, and you'll be rich. The middle class earns money. The wealthy structure money. Here's what that means. Most people trade time for money and earn a salary, the most heavily taxed form of income. Let's say you earn $200,000 a year in salary. Depending on where you live, you might lose 30 to 50% to income taxes. Now take a wealthy person who makes the same $200,000, but earns it through business profits, capital gains, or dividends. They could end up paying less than 10% on the same income, sometimes less than 5%. Why? Because capital gains are taxed less than income. Dividends from qualified investments can be taxed at lower rates. Business income allows for deductions before tax is applied. The rich create companies and funnel their income through them. Their car? A business expense. Their laptop, travel, meals, phone, business expenses. They deduct everything legally before the government gets its cut. Moral of the story? You need a company. Even a side hustle can be the gateway. 2. They use trusts and entities to shield assets. Most people pay taxes like individuals. The rich hide behind layers of legal structures, trusts, LLCs, holding companies, foundations. Here's the key. If you don't own it, it can't be taxed like you do. Let's break it down. Wealthy families don't hold assets in their personal names. They put their real estate, investments, and cash into trusts or companies they control. What does that do? It shields their assets from personal income tax. It protects wealth from lawsuits and creditors. It reduces or eliminates estate taxes when passing wealth to the next generation. For example, a billionaire might live in a mansion, but legally they don't own it. Their trust does. And trusts don't die. So when they pass away, there's no inheritance tax triggered. The wealthy plan decades in advance. They don't react to taxes, they design around them. If you're earning, investing, or even just building, talk to a tax advisor about asset protection structures. You don't need to be rich to start thinking rich. 3. They borrow instead of selling. This is one of the most powerful moves the wealthy make, and most people don't even know it's legal. Let's say you bought $500,000 worth of Tesla stock a few years ago. Today it's worth $2 million. If you sell it, you pay capital gains tax on $1.5 million. Depending on your tax bracket, that could be hundreds of thousands in tax. So what do the rich do instead? They don't sell. They go to the bank, use the $2 million in stock as collateral, and borrow money against it. Let's say they borrow $1 million at 5% interest. That $1 million is tax-free because loans are not considered income. They can use it to buy more assets, live a luxury lifestyle, or reinvest. In some cases, they deduct the interest on the loan as an expense. Now that interest payment helps them pay even less in taxes. This strategy works with real estate stocks, private businesses, even art and collectibles, and it's called buy, borrow, die. You buy appreciating assets, borrow against them, and when you die, those assets are passed on, often with a stepped-up cost basis that erases the tax bill. It's smart, it's legal, and it's how the game is played. 4. They defer taxes through retirement and insurance vehicles. Wealthy people hate paying taxes today, so they push them into the future or avoid them entirely. They use things like Roth IRAs or Roth 401ks, where gains grow tax-free index life insurance policies, where cash value grows tax-deferred deferred compensation plans, which delay income into lower tax years. Some ultra-wealthy individuals even use private placement life insurance, PPLI. It's like a custom-designed wrapper for your investments. While the average person buys life insurance for protection, the rich use it as a tax shelter. The benefits? No capital gains taxes, no income taxes while it grows, no estate tax if structured correctly. It's not just about hiding money, it's about time-shifting taxes to minimize the impact. 5. They employ their family. This one's as brilliant as it is overlooked. Wealthy families hire their kids, spouses, and relatives in their businesses, legally shifting income into lower tax brackets. Example: you own a business and pay your teenage child $12,000 a year for helping with admin or social media. They're in the lowest tax bracket, or may owe no tax at all, depending on the country. That income now becomes a deductible expense for your business, tax-free or low-tax income for your family. A way to build generational wealth early. Some even pay their children through intellectual property rights or licensing deals. It sounds complicated, but it's actually just smart tax planning, and the money stays in the family. The rich know you don't build wealth alone. You build it with a strategy and a team. The tax code was not built to be fair. It was built to reward certain behaviors, like investing, building, employing, and taking risks. The rich understand that, and they use every legal tool at their disposal to minimize taxes and maximize wealth. You can get angry about it, or you can learn the game and start playing it smart. If you got value from this video, drop a briefcase in the comments. Let us know which strategy shocked you the most and which one you're going to apply first.